What's up, guys? I want to do a quick video on my strategy when it comes to low cap coins on MEXC. Stuff that's either newer, illiquid, really volatile. It kind of is a continuation of the last video I did on layering in and out with fib levels. And this, I guess, is more focused on a strategy I use sometimes early on in the bull market on coins I don't have a lot of confidence in, but I do want to, I do want to take part in, potential future price movements. Some of these coins are new. There's not a lot of data, not a lot of liquidity, low cap coins. So before I get into anything, obviously none of this is trading advice. I'm going to be talking about taking very small positions in these coins. So I am always thinking in the back of my head that there's a good chance that they're going to go down by a lot. I'm going to lose money. It's not stuff that I actively manage. It's more or less I set everything up and then forget about it and just let these coins do their thing. So with that being said, let me bring up my chart here. Okay, so this is the MEXC spot right here. And I've got a strategy where, okay, this one as an example, lamb, as you can see, it's been in a long downtrend, but it is starting to come back up. Now, this is something I've never heard of. I don't know much about it, but, I kind of want to dip my feet in here. And in the same way that you can layer into these coins I talked about in the last video, you can layer out in a similar fashion. Now, the minimum purchase you can do on MEXC for any of these coins is like $5. Okay, so this strategy is under the assumption that you're going to enter and let's say we're using $5 as our entry capital. Now, obviously, that gives me two things. It gives me room to add to the position. Obviously, that's a small amount of money. And it also, if it ends up losing 50% of its value, I'm not hurting. It's not something I'm going to lose sleep over. It's not something I'm going to manage. And it also gives me the freedom that if it does go down 50%, I can add another $5 or whatever the case being. I'm just using that as an example because that is the minimum. Now, on something like this, obviously I have taken a look at levels. It's not here on the MEXC chart, but I do have levels set up for this one on my trading view, if I can find it. The question is if I can find it. So I'm going to be using 3-day charts. You can use the weekly, you can use the daily. I'm using the 3-day as I do for a lot of macro positions. And in this case, let me pull it up here. All right, so we've got we've got our bottom forming, and this is a common bottom we've seen in a lot of crypto. Comes down after a long bear market, a long retracement. You get your initial lows, and it creates a range, right? You've got this little range here, and then at the end, before the actual markup on a lot of these coins, what you get is a deviation below the range. So if anybody got into this asset at any of these lows before it actually gets marked up, a lot of the times they undercut the bottom of the range. In Wyckoff, that would be the spring event. You could call it an SFP, you could call it a down thrust or a failed breakdown, but that's usually where they start marking up. And in this case, we do have that, and a lot of the coins I posted do have that. So what I would typically do is, from the top, I've got my retracement from the top all the way to the bottom, and the common retracement levels, the 382, the 50%, and the 618, and you can add, if you want to add the 786 and the 886, you can do that as well. But normally I add at least the common retracements. I'm not entering in a lot of these trades expecting them to make all-time highs. I'm just shooting for typical retracement levels. Statistically, these are the most common levels that an asset retraces to. So that's the first thing I'm going to do after I've got my levels. And if you are trading with my referral link on MEXC, all these charts are free in my Discord. Just message me, send me your email so I know that you did use my referral code, and all this stuff's going to open up in the Discord. So I've got all the levels set on hundreds of these coins, adding all the time. So another thing I like to do is look for an extension. So we don't have a lot of data coming off the lows here yet. So what I'm going to do is take an extension of the last wave down, and the 1618 would typically be the target. That would be a minimum target. Sometimes you'll go up to the 2.0 or the 618, etc. But the 1618 is a common one, and again, that would be a minimum. I would expect this to, if it is reversing here, to at least come up here to the 1618 extension of the last move down. Now say, I'm going to go back to MEXC here. Alright, so now we've got MEXC, and the minimum you can buy is $5. So just as an example, we're just going to mark it by $5. Again, this is not advice. I expect, a lot of these coins might lose a ton of value. So this is kind of like, I think of it like creating my own little ETF. I might take however much money and spread it out over a bunch of these smaller illiquid coins, and we've had ones go up 1,000%, 2,000%, hundreds of percent, just ridiculous numbers. And this method takes a lot of the guesswork out of that. I'm not trying to get every single dollar on these price movements. If I do want to take a long with more capital than I'm using here, I would do that with futures. So we've got $5 we're going to buy, and what I'm going to do here is go to limit, and then you've got your price, you've got your amount, and your total. And in the same respect, you can only sell the minimum of $5 positions at a time. So what I do is I look for the first main level that I would expect this asset to go to, and obviously I do try to find coins that have massive that would give me really exceptional gains off the lows to even the basic retracement levels. You know, you want to find something that's been beat down but is starting to show strength. And what I would do is, in the case of this one, you know, our first major level we were looking at, let's say the 382, that's right around the 1618. So we would put in the level on the 382. I don't know if you can actually see these, but so the first level I would start taking profit at is 006944, which if you see the current price is 0016. So that's already an exceptional return to a basic retracement level. So what we're going to do is we're going to just, instead of trying to get dialed into the exact level, we're just going to go 006. Now I'll take my slider bar here, and what I'll do is I'll move this to $5. That's the minimum you can sell, you know, at a time in a position. So I'm going to set that up, because after this first price target, essentially the position's free, because I've got my money that I invested back out. I could let this ride for, you know, the entire bull run if I wanted. And, you know, that's another part of this strategy that I'll talk a little bit about here too. You know, sometimes you just leave a little bit in and let it ride. You know, once you've gotten your initial investment out, there's no risk. Until you do, obviously, you know, for all I know, lamb's going to go to zero. You know, I'm not investing, I'm not doing this because I think this is an amazing project that is innovative technology. It's going to change the world. It's strictly, I'm just using statistics, buying low, selling high, the most basic, you know, the most basic things you should be doing in trading. In Fibonacci, using the common retracement levels, these are the most common zones that this asset's going to retrace to. So we'll go back to MEXC, and we're going to set our first sell at 006. It says my estimated profit off of this part of my position would be $3 or 3.7. Now, the next thing I'm going to do is go to the next level up, which in this case would be the 50% retracement, which is 0129. So we're going to go to 0129. Now, same thing. I'm going to go to the slider bar, and I'm going to go to $5, right? And take another $5. You could do it different. You could say, hey, at this point, the asset's up, you know, nearly 10x from this point. So, you know, maybe we're going to take out $10 this time. Same thing. Now, the next level up, and you don't have to use Fibonacci. You could just look at the levels, follow the levels, and take a little bit out at each one. But the next level up, using Fibonacci, would be the 618, which is going to be 0242. And same thing. You know, you could just every time take out $5 out of the position, but because there's so much room for the price to move up, and each of these levels is a very, very large jump if you're looking at the bigger picture. So we could do $10 again, right? Now if we go to the next one, the next level up is 0.059. And again, I don't know if any of these are going to be hit. I don't know if, you know, this asset's going to take months to hit these targets. I don't know if it's going to hit them next week or if it's going to hit them at all. but I just set them all ahead of time. I don't have to pay attention to it. I don't have to watch it. I don't have to nurse it. And the next one would be 0.059. We're just going to go 0.05. Keep it simple. And, you know, at this point, the 786, that's a pretty deep retrace. I'm just going to take the rest of the position out there. If it does get there, again, might not. And that's the entire position. So now, you know, maybe 6 months from now, slowly this position will sell itself out. You know, maybe lamb goes higher than that. You know, maybe instead of taking out, you know, my entire position at the 786, maybe I take out a lot of it and leave a little bit to just coast. Because, you know, you've seen, if you're in our Discord, you've seen some of these go up 10x. You know, we've had ones that went up more than that. You never know. You never know which one's going to be the one that just goes nuts. And that's kind of what this strategy is all about. Now, in the same respect, what you could do is, if we go back to the chart, and I talked about this in the last video, about layering into a position. And to layer in, say, hey, lamb is up 18% today. I don't really want to buy in here, but what I could do is say, hey, we've got this nice move up. With how much it's retraced, we know that if we look at the 236, we know that it's in a correction right now. Could it keep going? Sure. But using the strategy from my last video, what I could do is say, hey, you know, this asset's up so much, I'm just going to wait for it to pull back to the 382 or the 50% or the 618, which lines up with our support zone here. Now, what you could do is say, hey, I'm just going to wait. I'm going to start layering in at the 382. And then you'd set up, instead of market buying in, what you could do is set limits. Say, hey, I'm going to buy $5 when it gets down to the 382, and go from there. Say it comes down to the 382, ends up coming all the way down to the 618. Well, you could set up limit orders at the 618. Say you have confidence, you love the pattern, you like the project, you whatever the chart. What you could do is set these all up ahead of time. I don't do that, not with, you know, not unless it's something I'm really fond of. If it's a really good chart, you know, if I'm expecting lamb to go up eventually, if I trust it, you could set all these ahead of time. You could buy $5 at the 382, $5 at the 50, $5 at the 618, and then $5 at the 786. Under that, you really wouldn't want to mess with it, because the whole idea of this chart is we broke down, we got under this support level here, which was resistance, support, 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 and now we're back above it. So underneath that, I wouldn't have as much confidence in this chart reversing. So, you know, that's something that, you know, you might want to think about. You could set stop losses if you want. For this type of strategy, if I'm using small amounts of money, I'm not doing that. You know, it's just one more way of getting knocked out of the position. I'd rather just be in it. If it goes up, you know, at some point it goes up. If it ends up going way down and, you know, maybe it doesn't look like a good chart anymore, I won't add to it if it doesn't look like a good chart anymore. But because it's such a small amount of money, it's not going to be any skin off my back. If I buy, you know, say 50 of these for $5 a piece, and half of them go to zero and half of them go up 3x, well, I'm still making money. And, you know, you really got to, that's a decision you got to make. You got to understand, you know, how much you're willing to risk. your risk appetite. Again, maybe it's confidence. Maybe this one is an exceptional chart and I do trust it. You know, maybe I could play this a little bit differently, but this video is just about taking very small positions in, you know, a bunch of low cap coins. You know, maybe they are part of an ecosystem on a large cap that you like, but they're just low cap, illiquid, very volatile. You know, this isn't something that I would want to risk a lot of money on. So in the most basic sense, I mean, that's what I'm referring to. You know, a lot of these MEXC charts I'm posting in the Discord, this is the type of strategy that I would use. I would layer in, I'd layer out, you know, in a general sense, because like I said, if some of these are going up 10x, if they're going up 5x, you know, you've got a pretty good risk to reward, because if they go to 0, you lose $5. If they go to 3x, well, now you're getting your 3 to 1. That would be the same thing as taking along with a 3 to 1 risk to reward. You know, you're risking your $5 for a potential. In this case, I mean, this had much higher than that, but you know, you would want to shoot for at least 3x on these to make it, to make that 3 to 1 risk to reward. And I think that's really all I want to touch base on this. If you got any questions, leave them in the comments. Hit me up in the Discord. You know, you've seen these charts I'm posting. I've talked about the way I do this. It's just a really passive way of taking part in these, or even sometimes I will take small spot positions on stuff I'm trading on futures, because if I get stopped out of my futures, well, maybe I still want a little bit of skin in the game. So that would be, you know, another way you could use this type of strategy. You could, you know, change it to fit your trading style, your risk appetite. And again, I said it, I forget it. These, you know, when these targets get filled, it's going to take my investment out. I'm just going to automatically get, you know, USDT deposited as it slowly makes its way up to some of these targets, if it does. But that's it. Pretty simple. Just using fib levels. I don't, you know, I like to look for these fib levels to line up with, you know, some of these zones, some of these support and resistance levels, because it kind of gives me a little bit of, when you see confluence like that, it kind of gives you a little more confidence in some of these movements, or, you know, some of the expectations. But yeah, comment, like, share, subscribe, join our Discord. Just being in our Discord is free. If you're trading with us on MEXC, all my MEXC charts and crypto stuff is going to be open to you for free. And yeah, that's it. Let me get out of here before I continue to ramble on. All right, guys, thanks.